Hello there, ladies and gentlemen. All right, if you can hear me right now, drop a comment, leave a hello note or comment in the stream itself. All right, and I know that we are live and ready to go. All right, and all of you can hear me loud and clear. All right, now, so I'll just wait for some response to come in over here. Right now, in the meantime, all right, today, all right, if I might over here, all right, I'm going to send out an apologies up front because I do have a live mentorship, a full day live mentorship boot camp happening tomorrow, all right from the morning, all right, all right, I'm a little bit under today, all right, with some kind of a skin rash today, all right, now, so I've just been scratching on it all day, all right, and I'm in a little, not a little, but a lot of discomfort. Yeah. Okay. Now, so as promised, I am running this session live, right? Because we did skip a session last week due to a schedule clash. Right. There isn't a schedule clash this week, so I'm gonna go ahead and run it. All right. Despite my discomfort. All right. But I'm just gonna keep it short, sharp, and sweet as well. All right. But I will not shortchange any of you. All right, who have been supporting me almost every Friday session. All right, it's great to have you here. All right, and Lawrence, all right, welcome over here. Jason, all right, Mei Ling, Eileen, and Wiki. All right, okay, hi to all over here. All right, who's joining me once again. Now, so as promised last week, all right, I wasn't able to go live with all of you, all right, but I did make a post inside the Facebook group itself, right, of the actions that I will be taking on the portfolio itself. Right now, so you would see all the entries being reflected, right, inside our official Excel sheet. Yeah, okay, all right now. So this is being tracked on a week-to-week basis, right, live together with all of you. Yeah, now, so let me go through some of them over here. All right, thank you very much, Susan. All right, I'm sure you'll go away. All right, just that right now it's a lot of discomfort. All right, just been itching all day and the heat isn't helping, that's for sure. All right, now, so without further ado, all right, now we did have our very first assigned option position. All right, so our WBA $45 put option did expire last Friday. All right, and the stock price was below the put option strike. All right, so I actually took delivery of the stock. Right, hence you see that there is a position now of 500 shares of WBA shares right now, but I did still record the full cash flow, right? Because right on the option expiry, yes, I do own the stock right now, okay, but it also means that all the premiums, right? I've collected everything, right? So I've collected every single cent of the premium, right, on expiry itself. Yeah, okay, now so that is reflected over here. We need $630 on the WBA position. So based on everything that's closed so far, right, our cash flow for our first month, all right, for the May expiry comes in at $2,294, right? So one, that hits our goal of $2,000 per month target, all right, and two, all right, it also hits our 2% target on a month-to-month basis, right? So we have hit all the notes over here on our first month, right, and now we're going to go into our second month, right? And based on our second month, right, we are already on the mark over here, right? Now, by being on the mark, all right, what I'm saying is, right, based on the four positions that have reopened, right, based on last week post in Facebook group itself, right, now we have already locked in $2,500 in cash flow or profits, right? So that's a good start, right? So all I really need to do right now is to manage the position, right? And of course, if there are bargains, I will be looking to add on more, right? But do also let me highlight, right, how this portfolio will be kept safe, right? And we will not overexpose ourselves. Now, so for those of you who have joined me from week one, right, you would have heard me say that for every portfolio put position that I'm selling to collect cash flow, right, I'm going to allocate 70%, right, of the cost of actually owning the shares. Okay, but now that we own WBA, right, will there be any change in the cost settings? There actually is. All right, so let me highlight it to you and let me show it to you clearly as well. Right now, so because I'm assigned the stock position, right, and I do not wish to take any margins on it, right now, any margins means I do not want to take any loans owning the shares. Why? Because otherwise the brokerage would actually charge me interest based on that loan amount. So I don't want to pay any interest, right? So here you would see me allocate, right, the full amount now, right, which means I take 500 shares times $45. Right, so for the WBA stock position, right, I'm actually allocating or setting aside $22,500 to own these 500 shares. Yeah, okay. But for the four portfolio put positions, right, they are still calculated based on the 70% requirement, right? And you can see, based on all my current portfolio open positions, right, my portfolio is now exposed, right, at a rate of $82,500. Yeah, okay, $82,500. So I still have a little bit more to go, right, which I can use to take on new positions today. Yeah, okay, so I'm not overexposed yet, despite the assignment of the stock. Right, and so this is, all right, where we gather from experience how we can squeeze and wring, all right, as much returns as we can, right, using this approach. But, right, there is a disclaimer up front. You must know your strategies very well, right? And two, you must know the stocks, right, that you're intending to trade on very, very well as well. Yeah, okay, so I'm going to get today's session started. And before I do so, right, please let me remind all of you, right, if this is your first session live together with me, right, can I just get all of you, right, to head over to this link, right, which is streamyard.com/Facebook, right? When you head over there, right, there will be a Facebook button in blue, right? I need you to hit the button so that you approve Facebook, right, for this software on the back end, right, to actually access, so that when you leave comments during the session, right, we will actually be able to see, right, who's leaving those comments, right? So if you could do that for me before we officially start, that would be really awesome, right? And second, if you see the banner scrolling at the bottom, right, all forms of investment, all forms of trading bears a risk of loss, right? So please be aware of all the risk involved, right, and be comfortable with all the risk, right, associated with the trades, right, that I'm sharing with all of you today, right, before going ahead to place any of them in your own live personal accounts. Yeah, okay. All right, now, so now that that is out of the way, please, I will remember to remove the banner, right, before getting scolded by some of you again. All right, now, so let's get going, shall we? All right, now, so first up, all right, as usual, I will be sharing my insights on the market updates. What do I think of the markets? Where do I think the trend lies, as well as the opportunities, right? And once that is done, right, we will go ahead with our portfolio actions, okay? All right, now, so let me bring over, all right, on what you see right now, the S&P 500. All right, so I'm going to use the S&P 500 ETF stock, right, which is the SPY. Right, so if you look at the SPY right now, right, a couple of weeks ago, I did actually draw this downward moving channel, right, of which during this period, right, the index was actually trading within this range. But of course, it broke out of it, right, and then after that came back into the zone over here, right? So looking at this, right, we have it challenging, right, once, it failed, right, and then it challenged a second time, right, and 2 days ago, we had that clear breakout. Right, and this breakout, right, has happened with momentum. It has happened with strength, right? Now, so we will expect the market to stay strong, right, at least for a couple more days. All right, now I don't say weeks, I don't say months. Why? Because the fear of rising interest rates is still there. All right, the inflation issues are still there. High oil prices are still present. Right, so this has not gone away. All right, and now we're officially in the bearish zone. Right, which means the market has turned bearish. All right, so now, right, you should actually be selling on rallies or taking your profit on rallies, right, based on what you see. But, all right, looking at this is what we call, as experienced traders, the dead cat bounce. Right, just like market when it goes up, it doesn't go up in one straight line. Right, there will be what we call the ebb and flow. Right, now the same thing is happening on the downside. Right, so we had this severe selling. Right, we have a flow back, all right, and then the sell off again, and then now the second flow back. All right, now, so this one, all right, is a dead cat bounce over here, all right, and where, all right, potentially might it stop, right? Just like many of my trading members, right, who actually think, right, that, sometimes mentors actually own a crystal ball. I don't, all right? So some of them ask me, Terence, where do you think this rally is going to go to? All right, my answer to them is actually, let me consult Nostradamus, because I don't know the answer. Right, but what we can do is this, right? Most of the time, right, we look at charts because they are kind of what we call an indication or self-fulfilling, right? It's self-fulfilling because many people are looking at the same thing, right? So based on this right now, right, you would identify that we do have a sideways moving channel of the index, right, with the bottom at 4,150, all right? Okay, now, so if you see this over here is 4,150, right, or 415 on the on the SPY. Yeah, okay, now, so I do expect this market right now, right, to actually bounce and hit this target. Yeah, okay, which is 4,150. So based on where we are right now, we have like what? About another 40 points upside. Yeah, okay, but okay, if it fails right now, it is not surprising as well because we did get close enough. There is no hard and fast rule that actually says, right, that it must hit the intended target. Right, close enough is considered good enough. Yeah, okay, and why? Another issue is also this: it is Friday, right, and the market has been kind all this week. All right, so anybody who has bought on the dip, right, will be thinking, do I want to hold my profit position over the weekend? And if they don't, they will be taking their profits. Right? And what actions does it comprise of when people are taking profits? They're selling. All right, and selling means, right, there's selling pressure on prices. Right, so don't be surprised if you see a sudden turnaround of the index going back lower today. Right, because it is coming to the end of the week and it is a long weekend as well. Because I've been reminded that it's Memorial Day in America next Monday, which means markets is not open. Right, so that can be seen in two ways. Right, usually heading into a holiday, right, they try to keep the mood up. Yeah, okay, but it also means that it's a long weekend. Traders may want to take their profits right into the long weekend. Right, so that leaves to be seen. Right, so either way, things can go. Right, but based on what we see right now, there is limited upside. Right, but more play on the downside over here. Right, so that's what I feel. Right, but that doesn't change my sentiments. Why? Right, because right, market always goes up in the long run. Right, so let me emphasize the last three words: in the long run. Or that's four. Okay, now, but okay, you need to play this right. Okay, it doesn't mean that when all stocks are corrected, right, everything is worth a buy. No, right, you need to buy when there's what we call blood on the streets or blood on the roads. Right now, so what you need to do right now is you need to go into the market, find great companies with great profitabilities and the sustainability of their business model itself, right? But having their stock prices smashed to the ground, right? And not just smashed to the ground, right? But to the extent where nobody actually wants to own them at this very moment. And that's what you call blood on the streets, right? And those are the stocks, right, that you should be looking into bargains for. Yeah, so if you really need to buy on the dip, right, this is the kind of stocks that you should be looking to buy. All right, not those stocks over here that has fallen 30% from their highs, but still remain very, very expensive. All right, those are not the place that you want to be in right now, especially in a bearish market conditions. No, all right, you need to find those cheap, beaten down stocks which still has the power of profitability. All right, so those are where your bargains are. All right, now, so we have done this with some of our stocks so far. So let's head into our positions, right, and let's analyze what we have right now. Okay, now, so the first trade that we have, let me scroll this up. Oh, yes, it's WBA. All right, so we do own the stock on WBA, right, and let's see where it stands right now. The WBA has rebounded off the low, right? So that's a good sign for us, right? But we're still about $1.50 away from the profitability, right? So let's see how much more, right, cash flow can we generate? Because now we actually own the stock itself, right? So instead of selling a portfolio put, right, I can actually add on a sell call option position, right? Because I own the stocks right now. So I actually got assigned the stock at $45 a share, right? $45 a share, right? So based on this, right, if I go to 17th of June, right, which is this month's expiry or this coming month's expiry, right, I can be looking to sell the $45 call option, right? Why? Because if I do that today, right, I can sell this for about what, 53 cents, right? Okay, and 53 cents times 500 shares. That's going to pay me another $200 over dollars in cash flow while I'm owning the stock. Yeah, okay, so I can wait until the 17th of June, all right, to see if the stock price goes higher than 45. If it doesn't, I'll continue to own the stock and look to sell another call option. But if it does go above, I would still pocket this 50 cents and potentially, 50 cents, all right, and break even on my stock. Why? Because on option expiry, all right, my stocks will be taken away from me at the price of the strike, which is $45. So I will lose my stock position, right? But I will get to keep the 53 cents that I'll pocket today. All right, so I'm going to go ahead and do that right now inside my portfolio account. All right, so bear with me for a moment. All right, while I go ahead and do that. Right now, I did actually have better opportunities during the week itself, right, to actually sell that call option position, right? But I choose not to, all right, because like I promised all of you in this live session over here, I will only take portfolio actions on Friday itself, all right? So I held and I held, all right? So today is the time to take actions on this, all right? So we have 500 shares, so I'm going to sell 5 call options, all right? And we're going to target what, 53 cents. We should be able to get it done. All right, voila, it's done. Okay, all right, now, so ladies and gentlemen, all right, so if you look at my official portfolio, this is under the trades column, right, at 2216, which is this platform's timing right now, right? I have a trade filled for the $45 call option. I sold 5, right, at 53 cents. So this is officially filled over here. Yeah, okay, so let's go ahead and record this on our Excel sheet. All right, so this is going to be trade number 12. I sold 5 WBA call options. I'll call this the covered call because that's what it is. All right, 17th of June, all right, $45 call on the 27th of May. Right, and we added 53 cents. So this adds another $265 inside our accounts. Now, what I'm going to do is I'm just going to cut this, right, and I'm going to copy it just above, right, this call option position so that I know these two are attached. Yeah, okay. All right, now, so our portfolio cash flow right now for this month has grown to 2,765. So that's a good sign. All right, we're way above our targeted amount. All right, so now that is done, let's go to our Intel position. We have a 17th of June, 42.50 put option at 144. Right, so let's see if we can take some profits today. All right, and it's worth doing so. All right, so Intel 42.50. Right, what are the premiums looking like? All right, so it's worth about 70 cents today. All right, which is half of the premiums left. All right, and with the lack of good bargains in the market, right, keeping 50% of the premiums, right, for the next 3 weeks in terms of profitability still makes sense for me to continue going on. All right, bar me not, right? Don't forget, Intel is still at this current price severely undervalued, trading at 7 times PE ratio. All right, so I love the valuation behind it. All right, so for that, I'm going to continue keeping this position. All right, so no actions on this stock over here. All right, now next one, Verizon. All right, we did switch over the position last week. Right, and all I did for this month was to record the additional cash flow that I pocketed, which amounts to 75 cents. All right, so that was the cash flow I'm recording for this month, which makes it fair on our target-driven basis. All right, now, so I have this put option that is worth 75 cents that I sold for, right, based on my cash flow collected. All right, so let's see how much it is today. All right, so Verizon has also bounced up, all right, along with the markets. So our $50 put option is about 50 cents today. All right, so it doesn't make sense for me to take profits as well. Right, I'm not taking a lot off the table, so it's better off just keeping it. All right, now next one over here is Fifth Third Bangkok. All right, we did initiate a new position last week. Right, we closed the existing one. All right, and then we opened a new month's expiry. All right, the $34 put option. All right, at 95 cents. All right, so let's look at this position now. All right, $34 put option. Right, we can close it today for what, about 17 cents. So let's go ahead and have a look. We pocketed 95 cents, or let's round it up to $1. And in just 1 week, I can collect 80% of the entire premium collected. All right, so does it make good decision sense for me to take this kind of profits now after 1 week? All right, for me, it's a definite yes. All right, unlike Intel where there's 50% left, unlike Verizon where there's still a lot left. Right, for Fifth Third Bangkok, no. All right, the majority of the profits have been realized if I close this position right now. So I'm going to go ahead and do this. Right, so let's see how much I can get. Right, or how much must I pay, all right, for me to close off this trade today? All right, so let's go ahead. Let's try this. All right, it's not biting. All right, let's go ahead and see. There we go. All right, now I did overpay it a little bit, all right, but I'm fine with this, all right, so I'm gonna go ahead and do it right now. I closed it for 19 cents over here, everybody. All right, so let me just verify with all of you. All right, so over here, all right, I did buy back the 5 put options, the $34 put options, right, paying 19 cents, all right, to close this position. All right, so let's go ahead and record this right now on our portfolio. All right, now, so I closed this today. Oops, apologies. 19 cents. All right, so we ended up collecting, we ended up collecting $380, all right, which is still a good profit over here. All right, so let's make this official. All right, we close this on the 27th of May. All right, so this is released, all right, from our capital requirements. All right, so all good. All right, so we locked down 380, all right, which also means another profitable trade. All right, now let's go to PayPal. All right, so our next position is on PayPal. We have a $75 put. All right, we sold for $3.10. All right, now let's go. PayPal. All right, pardon me if my eyes are shifting around because I'm looking at multiple screens over here. Yeah, okay. All right, now, so PayPal, let's go. So we did get the bounce on PayPal, all right, which is anticipated, which is why we did the trade. All right, so today, all right, this closing would cost us about $1.45. All right, so $1.45 to close this portfolio put position. Right, but that's still almost half the premium. All right, okay, so I'm happy with this trade. I like the valuation of this stock. Right, it has been sold off 70% before this bounce. Right, so I'm gonna keep this position. Right, okay, I'm gonna keep this position over here. So no actions on our PayPal trade. Right now, let's go into the last one over here. Oh no, that's it. Right, so that seems like all that we have over here. All right, now, so I actually intend, or I actually do intend to add a position today. All right, and whether you like it or not, this is definitely a stock that we have traded before. All right, and the stock in question that I'm trying to trade today, all right, is the stock that has just announced its earnings, and it's none other than Gap. All right, now, so many of you may feel uncomfortable when you trade Gap. All right, but why am I happy to trade Gap? Number one, all right, it is they call it a specialty branded apparel brand. Right now, so many of these retails like Abercrombie and Fitch, like Urban Outfitters, right, are belonging to the retail sector, right? And if you look at the retail sector, right, which is the XRT, is it? Let me just confirm that. Yes, right, the XRT, all right, which is the retail ETF, right? Can you see that since from the start of the year at about $100, it has been sold down to about 58. So this entire sector has been sold off by about 50%, right? 50%. Now that's severe. Why? Right? Because of the fear of rising interest rates, right? People are just, blanketing and saying that retail is not going to spend anymore. Hence, all these companies are not going to make money anymore. But that is not the case, right? That's really not the case, right? Why? Because, right, a lot of these bad news have already been played out. Right, look, if you look at Abercrombie and Fitch, right, they did report a losing quarter, right? But with that losing quarter, right, all the potential bad news is like kind of out. So it's like what we call a washout over here, right? If you look at the entirety of the company, right now, so let's go back to the last 3 years, right now. So if you look at it, of course, during the COVID time, they did lose money as well, right? But after that, can you see that they do have a very, very strong recovery? Right. Okay. And now, because of the whole logistical issues happening in China, right, a lot of these branded products are not able to secure their inventory to actually sell enough. Right. And that's the major issue. Yeah. Okay. So that's the problem that a lot of these retailers are actually facing right now. Right. But with this fact and the idea of them reporting, right, the worst possible quarter, right, I've told a lot of my students this before. When the worst is over, right, and if you're willing to look longer term, right, these are the times to enter into these stocks. Yeah, okay, so for that, I'm actually looking at a play on the retail sector. Now, I did miss, right? Let me admit it very upfront. I did miss the opportunity to get in on ANF. Why? Because I wanted the earnings washout to settle for a while before I got in. But look what happened the next day. Once all the sellers are out, right, and the price had been pressed as though the company is priced like for bankruptcy, right? That is the time for you to go in for a bargain over here, right? Now, so let's look at Gap today. The same thing happened to Gap. Yeah, right. Prices have been sloshed, right, all the way down over here. Look, all right, from $19 to $10. That's a 50% haircut over here. All right. Now, if we go to the books, right, they did announce a losing quarter, right? But what I want you to see is also this, right? If you look at the book value per share, this company actually has a book value per share of $7. And second, right, you need to think also about the idea of, do you ever think, right, that this company, right, which is Gap, right, they don't just own Gap, they own brands like Gap, Banana Republic, right, and right, this was actually surprising to me, but I don't know how many of you actually know this, right? Old Navy, right, as well. Oh, this wasn't a company, all right, it was another one. Okay, but this company basically owns Old Navy, Gap, Banana Republic. All right, now, so they are what we call brands that cater more towards the masses, towards the middle income range. All right, now, and during these times with higher inflation, right, or higher interest rates, people are going to cut on their retail spending. So, which are the kind of brands that will actually benefit? Yeah, okay, these. Yeah, all right. So I do see, some kind of recovery in Gap, right? And with limited downside, right, on this company with no chance of bankruptcy, yeah, okay, at $7, now it's already at 10. Right. I do see a good opportunity over here. Right. So I'm gonna go in and jump on it. Yeah, all right. So the low being at 9 over here. All right. So now let's see what we can get. All right. So 17th of June, if we go with the $10, all right, it's gonna pay us what, 60 cents. All right, so here's the deal. All right, now, because we have already achieved our cash flow target goal, right? So I don't need to achieve, all right, a percentage return goal based on this trade. So I would think safety first. All right, now, so if I think safety first, looking at the recent lowest price, which is 924, and even on the report, right, of bad earnings today, right, we did not hit that low as well. Right, so I think this is going to hold. Right, so what I'm going to do over here is, with 3 weeks left, right, I'm going to try to sell the $9 put option. Right, so I'm going to try to get this done for around 32 cents. Right, so let's see if I can grab it. All right, so let's go ahead. All right, it's not going to give me the 30 cents over here. So let's see if I'm happy with something lower. All right, now I'm willing to take lower over here. So I just grabbed it. All right, and I got it in at 30 cents. Yeah. All right, now, so over here, I just sold right, Gap, right, $9 put option on 17 June expiry. I sold 5 of them over here, right, pocketing 30 cents. So this is going to pay me an additional $150. Now, some of you will be asking, but Terence, right, is it worth collecting this amount? Right, like I said earlier, right, I don't need to consider a percentage target return goal. Right, why? Because I do have an entire target for my portfolio. Right, and my cash flow target has already been hit for the entire month. So whatever trades that I'm taking on right now is just an add-on. It's just an additional cash flow, right? So I don't need to take on excessive risk. I can afford to go safety, right, with those trades as well. All right, now, so let's add this to our portfolio. Oh, man. All right, this is trade 13. All right, we're adding Gap, GPS, all right, portfolio puts. All right, we're adding a $9 put on the 27th of May. right, for 30 cents. That's $150 in cash flow, but it's going to tie up $3,150, which you realize is not very expensive. And in terms of my $100,000 portfolio, this position is only taking up 3% of my portfolio size, right? So it's not excessive risk as well. It's a small little risk, right? But it does add the cash flow into my accounts, right? So based on all the trades that we have open, if they are all to expire, right, come 17 June, my cash flow for this month is actually $2,800, and I'm happy with that. I don't know how happy you are, right? But right, I'm happy with this. Yeah. Okay. All right. Now, so Brad over here, right? Please, if you're asking a question related to any of our mentorship programs, send us an email. All right. Okay. Go ahead, send us an email over here, and I'll address it and I'll reply it, right, after this session. All right. Can you go ahead and do that? Okay. All right. Now, so this is a public session over here, so I will not discuss any trades or matters relating to strategies that we do, right, during our mentorship programs. Okay. I hope you understand that. I don't want to confuse, right, the ones who are here, right, who have no background on options. Okay. All right. Now, so Andy, all right, now you are an old hand over here, right? So you know what to expect, what to do, right? So I'll leave you to decide what you want to do with your gap position. Yeah. All right. Now, so Anthony, all right, where do you get the last Friday's message? Right, you would just have to go to our public Facebook group, right, which is Impossible Cash Flow. All right, look for it over here, right? And once you are part of the group, just scroll down the post, right? You'll see one about a portfolio update. Okay, all right. Now, so if you're a member with us, all right, you would have the email addresses, right? And you should know, right, the emails to send us those trade questions. All right. Okay. Now, so unfortunately, our emails are very dedicated emails, right, and more so directly to our trade mentors, right? So I'm in no position to actually share them out here. I hope you understand as well. Right, but of course, right, for those of you who have generic questions that you want to get in touch, right, you can send them to the emails that you see on the banner right now. Right, this is to my admin team. Right, okay, now, so this is directly to the admin team, right, of our setup. Yeah, okay. All right, now, so, all right, Christopher, all right, if you're trying to email more about the mentorship program, yes, this is the email that you see scrolling at the bottom. All right, so you can go ahead, send us an email and ask them, about what do you want to look at. Yeah, okay. All right. Let me see. All right, now GPS. All right, now, so let me go back to the platform. Let's look at the retail stock. As you can see over here, I do have quite a bit of retail stocks on the list. I did wanted to add in a portfolio put on Brinker, which is EAT, another stock that we've traded often enough, right? But look at this V-shaped rebound, right? I'm going to wait. Right? I'm going to wait for a much better timing. There's no rush because this is just but a dead cat bounce, right? So trying to get in on a massive update, right? On a massive update when the stock is also massively up is not a good idea, right? The only thing I'm doing is chasing the trade, right? That's never a good idea in a bearish market, right? The case is different for Gap because Gap announced bad earnings today. So the stock is down, right, amidst, right, a market that's totally up. So we can take advantage of this downside over here, right? So based on what we see over here, there's nothing to add because every stock on my list over here is pretty much up, yeah, okay, or neither really severely down, right? So with that, I am going to wrap up all the actions on my portfolio for today, all right? And I'll just open up for a couple of questions before we end today's Facebook Live session officially, all right? So if you do have questions about what we have done over here today, all right, please go ahead and type them and leave it in the comments right now. Yeah, okay, I'll take about 2, right, before we'll end off today's session. All right, let's go. All right, welcome, Inghap. All right, Anthony, let me just give me a moment and see if I can grab the now it only goes up on YouTube. Oh, yes, it does. All right, Anthony, all right, can you see a comment, all right, that I've left over here, all right, of our Facebook group address? All right, okay, so I've left the link over here. All right, so if you can see, great, just click on the link, all right, and then just select to join. Yeah, okay. All right, welcome, Anthony. All right, and for the rest of you, if you have any further questions, please go ahead and type them out. Right, while I'm waiting for those questions to appear, if there is any, all right, okay, I also like to take this moment right now, all right, to seek your assistance, all right. If you do find the session very useful to you, you have learned something, you have pocketed some cash flow, you have made some money with us, all right, just hit the like button or hit the share button, all right. Let your Facebook circle know about this Facebook live session that we run, all right. Of course, with full accountability every Friday as well, right, based on the actions that we take, all right, okay, to reach out to them. Yeah, okay, so if they're in the investments, they're looking to grow their money, right? Let them know about this. They can just come and follow the session, learn more about options, learn how to build a portfolio with very, very safe counters in stocks, all right? And then decide for themselves, right, if they want to explore further. Yeah, okay, but it'll definitely benefit them just like it did with you over here. Yep, okay. All right, now, so Susan, all right, I won't trade a stock just based on its dividend itself. Right, first, right, the stock has to be cheap enough for me to look into it. All right, so for HIMX, the answer will be no. Why? Because the stock has already bounced. All right, okay, the stock has already bounced over here. All right, now, so with that, I don't want to chase the trade. All right, if it comes back off, right, towards the $9 level, it may interest me again. Right, but definitely not right now, just for the sake of dividends, no. Yeah. Okay. All right. So I'll be patient, right? Because this is a market right now where you should exercise a lot of patience, right? Do not chase this market. This is a market where you should let the price come to you. Yeah. All right. Let the price come to you. All right. Now, so for HIMX, no. Okay, so I think the lag would have been accounted for, and it seems like none of you really have questions for tonight's session over here. All right, so like I said just now, all right, my apologies if I have to cut this a little bit, not short, all right, but quicker than normal because I am starting to itch again. All right, so I'm gonna go ahead and take a rest for the day. All right, and then prepare myself for a full day boot camp tomorrow. All right, with our new members in our trading membership. All right, so with that, I will see all of you come next Friday live once again on Facebook. All right, and stay safe, everybody, and have a great weekend. All right, because Monday is a trading holiday in America, so there's no trading on Monday. All right, I'll see all of you, all right, next Friday live, okay? All right, thank you very much for coming here and joining me once again. I hope you benefited, just like every session that we do and, see each other. All right, and I'll see all of you really, really soon once again, okay? All right, bye for now. Good night, everybody. Bye.